Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time. We are starting a brand new playlist with a brand new expert, a good friend of mine, somebody I've known for several decades, Mr. Dan Bird. How you doing, sir?
Good morning. Happy New Year.
Happy New Year. Thank you very much. Thank you for doing this on January 1st. It's 12:30 your time, so I appreciate you doing this for us. What I want to highlight.
You're not hungover today, are you?
Oh, God, no. I haven't had a drink in a long time. So no, I did stay up till midnight though. That's actually news. I don't normally do that.
I feel hungover every day.
Nope, my body still got me up at 5:45. No alarm. I haven't had an alarm clock in 10 years probably. So crazy.
I haven't had a drink, just on a side note, for 36 years. So
yes, I remember. That's
something
awesome.
we have in common.
There you go. So hey, what I wanted to highlight here is why this is a new playlist and really what the goal of our discussion is. Again, this is a real estate channel. This is an investing channel. I've been very clear with folks. I made a lot of money in stocks, lost a lot of money in stocks, haven't been back. But you and I have known each other a couple of decades. You've been doing the work for a long time. And frankly, I want to learn a new skill. So this new playlist is going to be, my audience is going to follow along as I learn a new skill. It is basically going to be how to trade stocks non-emotionally. I am and have been an emotional trader. And as long as I have emotions involved, I won't trade, right? It's like, I'm not touching that again. That was hot. So, we had our first discussions on, I don't know, Wednesday or Thursday. We're now going to talk every Saturday, and we are going to trade real money. I'm moving some money over to Charles Schwab. But again, we are going to do the work and all of that. So again, this is not financial advice. This is nothing more than a friend helping another friend learn a new skill. That's how I see our conversations every week. Is that how you see it?
Yeah, that's great. Just to clarify on setting up that stock account, we're going to play around with that. And I recommend that people that are just getting started, they do that with a paper trading account.
Yes.
In this case, it's going to be real money. But I highly recommend they start with a paper trading account, which most of the platforms out there will let you do.
Absolutely.
Just get used to it. It is very, very different when you have your own money on the line. So I'll just say that right up front. You could gain a lot of confidence paper trading and think you know what you're doing. As soon as you get your own money on the line, all that goes out the window unless you have non-emotional trading. Yeah.
So I'm lucky enough to be in a position where I could take some, and it's not a lot of money. I think I moved over 25 grand. I don't need to hide anything. We're gonna use it, and I'm gonna treat it like a class in college, right? I got an advanced degree. I'm putting real money up because I really want to have skin in the game. I think paper trading is how most people should start. I'm lucky enough that I can move that over there, and if I lose it, it goes to zero. It's going to be okay. So again,
then you fire me.
Yeah, I will fire you as a teacher, but you'll still be my friend. It'll be okay. It'll be okay. But again, this non-emotional trading is people got a taste of the last time we talked. It's going to be based. Please correct me if I'm wrong, but basically it's going to be based on charts. Charts are what we're going to look at as the vehicle. Then you're going to be looking at the variables in the chart to look at trends. And we are going to be looking for, I don't know what to call this, trend reversions or things breaking out. Am I kind of summarizing our last conversation?
Yeah, all of that is part of trend following or identifying the trend. So there's a number of ways to identify the trend. We will also be using some fundamentals as well. So
like
it's not only charts. Like what industry group is the company in?
Oh, okay.
How are they ranked?
Okay.
Versus other stocks in the same industry group.
Okay.
Are they outperforming their group? That type of thing, which is an indication of a good solid business and
very cool.
So a business that's growing. So not fundamentals in the sense of analyzing the P&E and analyzing balance sheet and that kind of thing, but at least doing some relative strength.
That's awesome.
How they're doing.
So this is so awesome. This is completely new to me because what did I do when I was a stock investor? Is I read balance sheets. That's what I was trained to do.
But most people don't have time to do that. So
I agree.
That's why technical analysis is so valuable. Once you really understand it and you learn the French, like we talked about before, you can identify whether it looks good or not right away.
Yeah.
But you still need to make sure that you have good, fundamentally strong companies.
Okay. Yeah, and again, just to kind of teeing up what we are about to do together and people are about to watch. Are we going to be doing this on stocks? Are we going to be doing this on ETFs? Are we going to be doing this on indexes? Or yes or no? Or what do you think?
Well, we can do it on all three of those, and including crypto for that matter.
Okay.
But we probably won't be trading those. We may trade some ETFs, but it probably will be primarily stocks.
Okay.
Most likely growth stocks.
Perfect. Okay. I just want to kind of tee this up. And again, we're going to be, so my vision of this is you and I are going to meet on the weekend. We're going to meet after you've done your weekly newsletter, which we will show people what that looks like in a minute. We're going to be meeting. We're going to be looking at a set of variables. I'm going to be learning from you, and we either may or may not place a trade. As we talked about last week, something that we will always do is we will set a stop. Again, we're making this non-emotional because that was a big mistake. I never had stops on any of my orders before. We're going to right size the opportunity. That risk allocation, right, never should be a bigger percent of your portfolio than some levels. What other thing can people really look forward to as we move down this path starting next week together?
Are we going to actually use your account? You set it up in Schwab, right?
I did Schwab. Yeah.
We're going to actually show how to execute the trade.
If we can. I mean, I don't want people to see my account and all that stuff, but if there's a way to do it without showing the accounts,
there is a way to actually hide the account.
Okay, number. Yeah, I have no problem showing,
and even the balance, hide the balance too.
I don't care about the balance.
The reason I asked that is because there are some technical components of placing the trade.
Yeah, I mean, if you think it's valuable, then
when do you use a limit order,
versus a market order
to get into it versus a market order or even a stop order to enter a trade.
Yeah, I want you to treat this like you're teaching me French, like we talked about last time, or a new skill. And if we could show it without me exposing any of my private, account and social and all that stuff, then I have no problem hiding. I have no problem showing a balance of 25 grand or 20 grand or whatever it'll be.
Well, you've already said it, so.
Yeah, it's fine. It's fine. So yeah, that's my hope that we can do that. But yeah, again, if we can't get that off the screen, then we'll show them the trade statement or something. But that's my intention, is we're going to document how we do for the next 52 weeks. Some weeks we trade, some weeks we won't, some weeks we'll win, some weeks we'll lose. And hopefully by the end of the year, I'm a non-emotional trader. That's my hope.
That's an important concept to understand too, by the way. And one of the reasons why you want to use stops is because you will never always be right.
Yeah.
And the most important thing psychologically, there's a number of things psychologically, but one of them is do not trade in order to be right.
Yeah. Okay.
That is not the point. The point is to make money.
Yeah. Yeah. Yeah, exactly.
Right.
Yeah. It's not about being right. It's about making money. The other thing I hope that happens here again is, we set it up on Saturdays and I don't look at it again until the next Saturday, right? Whatever happens during the week happens. That's my vision. I don't see myself being, somebody that's looking at charts all the time. We're not going to be doing, things that will move that quick. So we'll be doing kind of medium trades versus short term, I think. Is that fair?
Sure. Probably. Yeah.
Yeah.
Probably. It could be a week to a month.
Yeah. I want to kind of set it and forget it trades. Cause again, I don't want to have, I'm lazy, dude.
So what we'll do is we'll do the work. We'll find the right trade at the right time. So timing is important.
Yep.
We'll place the trade.
Yeah.
We'll put a stop on.
Yep.
And if it hits the stop, it will be out the next week.
Perfect.
All
yeah.
right?
We'll just talk about
it. If it doesn't hit the stop, and let's say it starts moving up.
Yeah.
Then what I like to do is to place the stop just below the 21-day moving average.
Perfect. And we will talk.
So that's
and we will do all
we'll
that.
We'll look at where that is. We'll move the stop up to there, and we'll get it.
And we'll tell them why we did it. And that's again, the goal of this is to have Dan teach Mike how to be a non-emotional trader. We're going to let the audience follow along if they would like. This is not financial advice. I'm basically showing you how I learned French, and we'll see how it goes. That's what I'm envisioning. Sound good?
Sounds great.
All right, man. Well, again, we're going to do this in video too, but what is your email address? Because people need your newsletter. What is it?
Your connection